As of 2023, the majority of rental housing in the country is owned by individual small-time investors, while corporate landlords only have a small share. Single-family homes have become an area of increasing interest for large companies. There are five major companies in the industry: Pretium, which owns about 90,000 homes through its subsidiary, Progress Residential; Invitation Homes, previously owned by Blackstone, but later sold, with about 80,000 homes; American Homes for Rent, started by Wayne Hughes, with about 60,000 homes; Tricon Residential, based in Canada; and Amherst. Corporate landlords have been particularly active in the Sunbelt region, with Texas seeing corporate buying 28% of all homes sold in 2021. Georgia and Florida also had significant percentages of homes purchased by corporations. Rent increases for single-family homes in these areas have outpaced other parts of the country since the start of the pandemic, with significant jumps in cities like Phoenix, Tampa, and Atlanta. The entry of institutional investors into the housing market has created challenges for young people and working-class families looking to own a home. These investors often hold properties for years, reducing the available housing stock and making it harder for people to transition from renting to owning. Companies like Blackstone have been highly profitable in this market, with their real estate income trust delivering a strong return on investment in 2022. However, private equity involvement in housing has its drawbacks. These investors tend to prioritize short-term returns, often aiming to increase cash flow and sell or take the company public. This approach contrasts with smaller landlords who focus on long-term investments and tenant satisfaction. Private equity groups also use real estate funds as a hedge against inflation, which has boosted their popularity. Experts predict that by 2030, institutions may own a significant portion of the single-family rental market. But building more housing remains a crucial solution to the current housing crisis. The rise of institutional investors in the housing market can be traced back to the late 2000s, when Wall Street firms started buying distressed properties after the financial crash. This led to the emergence of the single-family rental industry. While some argue that the institutional investors provide a quality product for higher-income individuals, others point out that limited supply leaves few alternatives for renters. Home ownership is traditionally seen as a path to wealth building, but not everyone desires to own a home. Renting provides flexibility and is favored by many consumers. The cost comparison between renting and owning a home depends on factors like home prices and mortgages rates. Owning a home tends to be more expensive, considering maintenance cost, while renting offers more flexibility. The home ownership premium, indicating when renting or owning is more favorable, has fluctuated over time. Currently, high home prices and supply constraints contribute to the challenges faced by potential buyers. However, some experts predict a decline in home prices, although limited supply will likely keep them inflated. To address the housing problem, many experts believe that increasing housing construction is key, rather than limiting corporate activity. Some institutional investors are already building homes, but it will require more time and effort to make a significant impact. Congress members propose measures to restrict corporate involvement in the housing sector, but passing such bills would require significant bipartisan support, which may be challenging to achieve. Institutional investors currently own thousands of homes, and there are discussions around taxing vacant properties to encourage sales and increase housing availability. The housing market is experiencing a significant presence of institutional investors, which presents both opportunity and challenges. The focus on single-family homes and the rise of corporate landlords have impacted rental prices and reduced housing options for aspiring homeowners. Building more housing is seen as a potential solution, but it requires comprehensive efforts and may take time to alleviate the housing crisis. In addition to the information provided earlier, it's worth noting that the entry of institutional investors into the housing market has had a profound impact on communities and rental dynamics. These investors often operate at a larger scale, which allows them to exert significant influence over rental prices and market conditions. One notable effect is the increased professionalization and consolidation of the rental market. Institutional investors bring a level of efficiency and standardization to property management, often implementing streamlined processes and technologies. This can lead to improved maintenance, quicker response times, and better overall tenant experience. However, critics argue that this professionalization also brings a level of detachment and impersonality to the rental relationship, as tenants may have limited interactions with individual landlords or property owners. Another consequence is the potential concentration of rental housing in the hands of a few powerful entities. The acquisition of a large number of homes by institutional investors can create a situation where a significant portion of a community's housing stock is owned by a single company or a handful of companies. This concentration of ownership raises concerns about the control and influence these entities may wield over housing availability, rental prices, and neighborhood stability. Moreover, the rise of institutional investors in the housing market has led to increased competition for available properties. This competition can make it more challenging for individuals, homebuyers, especially first-time buyers, to enter the market, as institutional investors often have access to significant financial resources. They can outbid industrial buying, driving up home prices and exacerbating affordability issues. Furthermore, the actions of institutional investors can have ripple effects on surrounding neighborhoods. When these investors acquire distressed properties, they may invest in renovations and improvements, thereby increasing property values in the area. While this can be beneficial for existing homeowners, it may also lead to the displacement of lower-income residents who can no longer afford to live in the revitalized neighborhoods. On the regulatory front, there have been calls for increased oversight and regulation of institutional investors in the housing market. Some argue for stricter limits on the number of homes these investors can own or proposals to increase taxes on their properties to discourage excessive speculation or the hoarding of housing stock. Balancing the need for affordable housing and home ownership opportunities while accommodating the interest of institutional investors remains a complex and ongoing challenge. It's important to recognize that the housing market is multifaceted, and the involvement of institutional investors have both positive and negative implications. While they bring investment, efficiency, and professional management to the rental market, their activities also raise concerns about housing affordability, community stability, and the potential for market concentration. Finding a balance that addresses these concerns while promoting affordable housing options and home ownership opportunities for all remains a crucial task for policymakers and stakeholders in the housing sector. Let us know what you think in the comment section below. Like and subscribe for more updates. See you on the next one.